Welcome to the Nick Rutherford Report. The market is either going to take advantage of you or you are going to take advantage of it. Hit that like button, subscribe to this channel, leave me a comment because this is the place to be for the financial news that matters for your net worth. We've had a crazy week with Oracle's huge future revenue projections, and the stock went completely bananas. It was up like 40% at one time. It looks like it's been giving back a lot of its gains. And the reason I'm looking at this is because this has caused all sorts of craziness in the market. Zero Hedge put out this chart that is crazy. It's just crazy. Oracle thinks that this is their... I shouldn't even say the word because it'll get me censored. I'm not going to say it. So this is their insane press release that they came up with. This year they're going to make some number of billions, and then 20 billion, and then 40 billion, and then 80 billion, and then 120 billion, and then 150 billion. It's just going to double and then double because trees grow to the sky. We're going to need so many data centers and so much inference time on the cloud that, well, we just can't spend enough money. Now, I'm a little skeptical of this. Maybe it'll work out, maybe it won't, but I've got some interesting statistics for us to look at that I've been looking at. So I want to look at NVIDIA. NVIDIA has been on a complete tear. It's up 53%. So the market really believes this type of stuff is happening. This is over the last 6 months. Now, they really believe this data center build out is happening because Micron is up 64%. And just in the past month, it is up 23% because, well, data centers, they need lots of memory. And Micron is the US-based manufacturer to give us a lot of memory. One of the reasons that I love Micron, and I'm not saying that I love it at this price, but I love the company because, well, as the world makes more and more electronics, we need more and more AI, more and more self-driving cars, and more magical robots that are coming. Maybe they'll come, maybe they won't. I don't know. We'll have to see. It looks like they're coming. But my point is, this is a company that makes memory in America. And if you haven't noticed, the government in America wants to incentivize companies to make stuff in America. So Micron is going to be a huge beneficiary. And maybe people are starting to realize this. They're starting to think that obviously we're going to need 23% more memory than we did last month. So I don't know how crazy things are going to get, but it looks to me like things are getting crazy. You've got Broadcom. Broadcom has been up 85% in the last 6 months. And just in the last month, it is up 15%. Now, it's pretty amazing when Micron is like beating out Broadcom in the last month. See, things are getting a little wild. And I'm bringing this all up because this is starting to remind me of the internet boom. Of course, there's revenue, but a long time ago, they were building out lots and lots of fiber, and they thought they would just build fiber forever. And Oracle, let's look at this maximum chart of Oracle, bring it back here. You remember this little blip here where Oracle went from, you probably don't, I don't remember it. I was like 15 years old at the time, but it's important to study the past to predict the future. That's something that I learned from Ray Dalio. And if I study the past, well, at one point, Oracle got a little crazy. And everyone from Oracle projected that profits would grow to the moon. And you know what? They grew to the moon, and Oracle went from $9 quickly up to $42, going completely exponential. When I see an exponential chart, that's not a chart that I get excited about. That's a chart that I get terrified watching. Now, hopefully, I was smart enough to get in at the beginning of that chart and then sell near the top. But, well, I'm not in Oracle, so I'm not going to worry about that. But this is looking awfully familiar. It smells familiar. Now, I'm not saying it is because there's a lot more revenue here, but what if AI, just as a thought experiment, doesn't turn out as well? See, another lesson I learned from Ray Dalio is that if you worry, you don't have to worry. So I'm going to spend lots of time worrying so I don't have to worry. But this chart is making me nervous. And when mega cap stocks that have, what is the market cap of this? The market cap is $800 billion, make 40% moves, well, you got to pay attention because something is going on. Now, a few other things that I think is worth paying attention to is silver. And I've got the chart of silver here because just recently, I don't have the article here, but you can Google it if you want. The government has proposed, or whatever agency in the government has proposed that silver become a strategic metal. So they may have to start stockpiling it. And if they don't have it and they do have to start stockpiling it, that means price go up. So maybe I need more silver. Now, silver has not had a parabolic high yet. If I look at silver, it had this chart is not quite going back far enough because I'm using the Sprott Physical Trust here, but there was a parabolic move back here in 2011 in the early 80s. So we obviously have not reached a parabolic move. Not saying we will, but the most important lesson in investing that I've ever learned is buy low and sell high. Sometimes it's pretty obvious to know when things are low and when things are high. Certainly silver is not at its all-time high. Doesn't mean that it's going to go there tomorrow, this year, or next year, no. But some other things are at their all-time high, and sometimes when things are at their all-time high, they go back down. I'm just worrying because if I worry, I don't have to worry. Now, I do like to look at Bitcoin because Bitcoin is very exciting. And frankly, it's been very boring because Bitcoin is just going sideways when you have other mega caps going up 40%. I can't even believe that I'm saying that because this is just, to me, this smells like a bubble. Now, I'm still long because I'm long, and until something changes, because the bubble can just keep going unless something pricks the bubble. The data centers stop coming. The money stops flowing. We have a recession. AI doesn't turn out to be what it is supposed to be. I'm not really sure. Leave a comment below. You tell me if you see what's going to trigger this bubble, or if you see it happening, write me an email. Now, with Bitcoin, we're seeing this article come out on Zero Hedge today. Spot Bitcoin ETF sees strong demand. I spoke correctly there. And the crypto market tops $4 trillion. So apparently more money allegedly is flowing into Bitcoin. Well, that could precede a spike price, or a spike in the price. I don't really know, but this typically has been the time where Bitcoin goes bananas. It runs on a 4-year cycle, or historically it has, if you haven't noticed. Now's the time to start noticing. Bitcoin go way up, Bitcoin go way down, Bitcoin go sideways, Bitcoin go way up again. That's what it's been doing. Will it continue to do that? I don't know. But Bitcoin is at that time where it spikes way up. And we've just kind of been treading sideways. So we'll see. I like to keep things really, really simple. Bitcoin topped out at 20,000 the first time, then 60,000. So that's 3 times. So at the most, just giving those 2 data points, which doesn't give me a lot of data points, well, maybe Bitcoin could get up to, what is 60 times 3, 180,000 maximum? Maybe, if we're lucky. I don't really know. But just following the past trends, that's where this trend could lead. None of this like 500,000, 1 million times. Sure, maybe it could go up there in the future, but I'm just looking at what the market is telling me and just using the data and a little common sense. I think people get a little too crazy, but everything is going crazy. And you need to remember this quote from Warren Buffett: be fearful when other people are greedy, and everybody's getting greedy right now. Why do I say that? Well, the Shiller PE ratio is at 39.58 as of Thursday, September 11th. This is the stock market analysis we're getting right here. When has it been that expensive in history before? During the dot-com boom. This is even higher than 1929 crash. This is the highest it's ever been, except one time in history. Now, I'm not saying rush out and sell stocks. I'm not saying that. I'm saying pay attention because things are looking bubbly. That's all. Just pay attention. Now, another thing to look at here, let's look at the S&P 500 dividend yield. This is the amount that companies are kicking back to you as a dividend from their cash flow. It is as low as it's ever been. And this is the way I look at it. It's inverse. It's an inverse. If you just look at this, maybe in the last 20 years, the highest the dividend ever was in 2009 when the crash happened. So we just think of this as an inverse. And right now it's at 1.175. When did it bottom out? Roughly at 1.17. I'm sorry, I misspoke there. It's 1.17. I think I said 1.175. Yeah, but it bottomed in April 2000 at 1.15. Right now it's at 1.17. So we are inches away from the all-time lowest dividend yield ever. So let me tell you, if we don't keep building data centers, if AI doesn't keep getting better and more expensive, because it's got to get more expensive, if the economy slows because of jobs or because of a war or because of anything that happens, well, everything is priced to perfection and it's going up and up and up. And if I study the past to predict the future, things will not end well. But I'm not selling yet because I've been long for years. And until I see the signs, well, this could keep going. I don't know how long the party will be, but you're going to have to hit that like button, subscribe to this channel, and just watch to let the market tell us what to do. I'm watching the market right now. See, what I believe in is finding good companies that are good companies and buying them at a fair price and then doing nothing. But every once in a while, good companies get bid up to tremendously high prices. And every once in a while, good companies get bid down to tremendously low prices. So right now I'm doing nothing because I don't know what to do, but the market will tell me. And I need to make great investments because I believe that through making great investments, I can secure my financial future and the future of my family. This way, I don't have to depend on a job. I don't have to depend on other people because I'm buying assets in companies and investments that go out and they do work. They provide a great value to society. They create goods and services that people use and people pay for. But sometimes the market gets a little wonky. So right now, I don't see any great values and I see a lot of danger. And I'm going to leave you with a quote. I want to end with this quote from Jim Rogers, one of the most successful investors ever. He says, "I just wait until there is money lying in the corner, and all I have to do is go over and pick it up. I do nothing in the meantime." So I don't see a lot of money piled in the corner right now. I see a lot of people taking their money to buy stocks. And that has me very concerned.